Well, good morning and welcome to 2015. Andrew Valiant, Michael Doherty, Dornbush Partners Download. Good morning. Michael, before we get into all the exciting bits, good Christmas?
Very good Christmas, thanks, Andrew. Yeah, a bit of a distant memory now, of course, but no, enjoyable Christmas, pretty quiet, but I think we needed a quiet one, actually, after a pretty hectic year last year.
Sure.
Again, you know, we've mentioned it on numerous downloads. Been a pretty volatile, bouncy old ride, the share market.
Yeah.
And all in all, not a fantastic year either for the market.
Up
I think
1%.
the S&P 500 up 1. The total net return index, which, you know, sort of includes dividends and assumes reinvestment, was up about 8%. So really dividends were the saving grace. But
And we've been saying that all along, isn't it? You know, for people who want to buy bottom draw stuff, that's great, but really the short-term stuff is simply going to be around income return, and that's what the banks have done so well, Telstra's done so well, all that type of stuff.
Yeah, very true, and particularly too now, interest rates very low, and of course expected to get lower. Just looking before it, the ASX interest rate tracker, 30-day inter-day bank bills predicting a 20% chance of another interest rate drop in February, and a lot of other analysts, economists predicting probably another one after that. So back to 1.5%, the official cash rate potentially. So high yielding stocks are still going to be flavour of the month, we think.
And that's why, you know, CBA at $86, Commonwealth Bank at $6.07. You know, anything that's got a dividend starting with a handle 5, so 5% plus, very much in favour at the moment. What have you been buying? Anything of interest or note?
Yeah, Andrew, again, I'm very much in the mode of just topping up on some of those blue chip stocks. So banks, for mine, still are pretty hard to beat. I've been a buyer of Bank of Queensland whilst it's dipped under $12. They've just formally signed on John Sutton as the CEO.
Great call.
He'd been sort of the incumbent since Grimshaw sort of left in sort of somewhat mysterious circumstances.
He got a big payout from Texas. Show me the money.
Absolutely. So good luck to him, of course. But no, Bank of Queensland for mine, Andrew, is one to keep topping on. But again, I still think there's some good value in those big blue chip companies, and certainly again on those high yield ends.
Yeah.
How about you, mate? What are you thinking?
Oh, look, there's a couple that I'm looking at. I mean, again, you're sort of looking at the quality end. I'm probably sort of in the middle too. And they're certainly not bad companies, but, you know, caveat emptor, you know, buyer beware. One is called Asaleo, and we actually helped float Asaleo middle of the year. Started at $1.65, went to $1.95, back at about $1.70 at the moment. And Asaleo does personal hygiene products, tissues, sorbent, Daco, that type of thing. Number 1 or number 2 in most of their markets. It's around a 5 to 6% unfranked dividend this year. It'll become fully franked next year. But certainly that's one we've been looking at. And the other one, which I personally hold, is one called IPH, which recently listed on the market, and they're patent lawyers, and as we know, everyone's sort of madly suing each other, in particular in the technology space. IPH work on 2 fronts, trying to protect those people from being sued or actually being litigators. And the main reason they floated was to try and give some of their younger partners ability to get equity, 100-year-old business, and looking at moving into the UK. So, and if you look at the successor companies like Slater and Gordon, like Shine, both listed on the ASX, there is certainly appetite, in particular in offshore markets, for Australian legal expertise. But again, you know, it's an emerging leader. It's probably a little bit more at the pointy end. So, you know, you wouldn't be putting in as much money into, say, a Bank of Queensland or something like that. Otherwise, not really much happening at the moment. And certainly, you know, we tend to talk about what's coming up next week. We're still really in the holiday period. One key thing we probably should touch on is confession season. And December, got December on the brain. January does tend to be a fairly ordinary month from a share market point of view, because companies come out with profit warnings, and we saw, say, Infomedia came out with one a couple of days ago, IFM. A lot of companies report their profits in February, and they're actually therefore looking at their numbers in January, and if they're going to come out with bad news or good news, they've got to tell the stock exchange this month. So we've also been saying clients just keep a couple of dollars back leading into February, because January confession season, there might be some opportunities there. So probably over the next couple of weeks, we'll also be touching on confession season, but just remember February reporting season, and of course that means dividends. And, you know, you touched on them right at the beginning of our little segment, that last year was around dividends, frankly in a low interest rate environment. environment, I can see more of the same coming as well. So really important this upcoming profit reporting season.
Yeah, very much so, Andrew. I'd agree. And just to finish off, reading an article this morning, just on some of the thoughts about 2015, the year ahead. And look, most analysts have got earnings per share growing at anywhere between 0 to 6%. So we're probably not going to see, based on those assumptions, great capital growth potential. However, they did again reinstate that dividends per share should be on the increase still. So again, I think dividends is where the activity is, so to speak.
Well, stay tuned to the Dornbush download for all the good news. Anyway, Michael, you're okay?
Very good, Andrew. Good way to kick off the new year.
Absolutely.
Market's already been a bit volatile, so we're straight back into it. But I look forward to another good and hopefully reasonably prosperous year ahead for us.
Indeed. Till next week.
Thank you.